Is it just me, or does Thanksgiving already feel like it was about a year ago? Anywho, moving on. Today we're going to talk about risk on, stocks and Bitcoin way up. We're also going to discuss three positives for the housing market: interest rates, inventory, and conforming loan amount limits. Welcome back to This Week in Mortgage, everyone. I'm Sam Battaglia at Mortgage Black in Beverly Hills. I hope you're having as good a week as you can. All right, so risk on appears to be the sentiment on Wall Street and Bitcoin Street, for that matter. The Dow, S&P, and the NASDAQ have all rallied. Not yet at all-time highs, especially for the NASDAQ, but some indexes are getting close. But it seems like all the actions is in about 10 or 15 stocks. I don't know how great that is if you don't own those 10 and 15 stocks, but based on the action, it looks like everyone's got a little piece of them. This is all just a big representation at the end of the day of the markets believing the Federal Reserve is done raising rates and might have to start cutting rates sooner rather than later, as we've been saying. And a big thing to watch for, if you want to track the stock market and Bitcoin for that matter, is the economic reports, which should start coming out here in the month of December. Today is December 1st. For the month of November, looking backwards, of course. But we'll give the Fed some guidance and us some guidance to try to how to read the tea leaves when it comes to the Federal Reserve. All right, moving on to the housing market. So we've got conforming limits are also up now again for 2024. Pretty good news here. So on a conforming loan for a one-unit property, $766,000 and change. And on a four-unit conforming property, and there's of course 2 and 3 unit limits. You can look those up. But a 4-unit on the other end of the spectrum is $1,474,000 and change. Now this is a true conforming loan. This is across the whole country in every county. When it comes to high balance, high cost loans, Los Angeles County, for example, and Orange County, for example, do have the high balance, high cost patch, as I'll call it, where a one-unit loan is $1,149,000 and change, and a 4-unit loan is all the way up to $2.2 million, $2,211,000 and change. That is a very large number to do a conforming loan. What this does, it's a big help for the real estate market. These higher loan limits work side by side with the Fannie Mae, Freddie Mac guidelines to make home ownership affordable and accessible, as we know, because they will do some certain things in underwriting that private money, jumbo portfolio money, for that matter, will not step out on. But Fannie and Freddie will do it in terms of down payments and whatnot being less, especially on units. So these big these big loan amount limits, which are 4.5% increases from this current year, definitely keep things moving in the right direction for housing. Second positive thing of the day for housing: the 10-year Treasury, which most things do. A general tone of interest rates and mortgage-backed securities, not hand in hand, but hopefully getting back there. Down to 422 from about 5% yield on the 10-year. That's a big relief. It's brought some interest rates on mortgages down into the high sixes for some scenarios, of course. Needless to say, this helps in two different ways. Number one, affordability is getting easier, obviously. Less money out, more affordable every month. But number two, the second thing, and maybe at the end of the day, the end of the day, the mental stance people are taking on this money seems to be a little bit less reluctant to put their toe in the pool, for that matter, of buying a new house. So affordability definitely is being helped out, and people's mental capacity to process these higher interest rates when it has a 6 in it rather than a high 7 or an 8, that definitely helps things out as well. All right, moving on to inventory. As we've been talking about, it seems like it's rising, but not flooding the market. So this is enough to keep people interested in looking at new listings, but not enough to bring down value given the elevated rates. So it looks like things, for that matter, for lack of better, are a bit Goldilocks, and the needle is being threaded on the balance between, if we had too much inventory in these higher rates right now, values would come down a lot. But we don't have too much inventory. It seems like we're just getting enough supply back online in the market where it keeps things fresh, yet doesn't bring down existing home values. So for the moment, I guess, given where interest rates are, this is about as much as we could ask for. And all of that said, this slight tick up in inventory and slight tick down in interest rates headed into the last month of 2023. Could be a decent setup for housing when it comes to the beginning of 2024. Okay, everybody, that is my show. As always, thank you for watching. As I always say, especially these days in this crazy, unfortunate world that we live in, be a good neighbor, be a nice person, do unto others, all the things we were taught when we were little. A lot of that stuff seems to be forgotten about these days, and it'd be nice if some of it started creeping back into our lives every day, given some of the circumstances out there right now are really tough to watch. Okay, everybody, as always, thank you for your time.